Welcome to The Ownership Economy, the podcast that explores the people and ideas that are utilizing technology, economics, and the law to reimagine how the economy can work for everyone. Here we connect with the entrepreneurs, investors, thought leaders, academics, and politicians that are constructing a better economy, one based on broad-based ownership and democratic governance. I'm Martin Smith, and I'm joined by my co-host, Jahed. We are two investors and operators that aim to use this platform to showcase the people and ideas that will shape a society that offers more economic opportunity for all. Today, we are joined by Jordi Riulas, who runs business development and is a board member at EthicHub, as well as an active investor. Previously, he founded multiple companies in the telecom space before changing focus to the blockchain space. I'm going to hand things over now to my co-host, Jahed, who will run the interview with Jordi.
Thanks, Martin. So Jordi, welcome. Thanks for joining us today. Your background is super diverse, so I really think we could just start there. You have a bit of a different story than some of our other folks. How did you get here today?
Yeah, hi. Good morning, guys. Hi, Martin. Let's say I start from my age. So I have 50. So I start with .coms when I was young, when I leaving the university. So we create, let's say, an old-fashioned engineering company that we work with technology before we work with GPS and telecom communications before the mobile service starts to give to the. So we start with radio or something like this. Yeah, very boring stuff for the young guys right now, but we managed for 15 years to give a service of geolocalizations. And we sold the company at the beginning of 2007. And after, with the same technology, we moved to software as service business. So we use mainly the same technology, the same knowledge with a different way to sell it. So it's a big lesson of life, how you can use your skills and sell it in different way. And it works nice as well. So we did the exit. And at one point of my life, 10 years ago, I decided that it was enough for me to start and to launch a startup or a company. Mm-hmm. So I decided to move to, somebody says like angel investor. I don't like it too much. Let's say more like a groupie of a startup, no? So a guy that is helping young guys with energy, with a little bit of money, with a lot of hours and a lot of coffees. And yes, you take the energy and the fun of these guys, and they take a bit of money and your experience. So I joined to different projects and like a mentor. That we can talk about it after if you are really interested.
Oh, I mean, I'm definitely interested in getting, there's stories of the entrepreneurs who come here are always super interesting. I'm already kind of, fascinated by you had your start in, telecommunications, which is this thing that, like you said, some people have this perception of it being boring, but then you look at how much it has been key to shaping the world, right? With like geolocation, all these things we take for granted. So, I mean, please, by all means, continue. I'm very much, I noticed that you were an EIR at a fund. You were into biotech for a while. So please, let's complete that story before we dive into EthicHub.
Yeah, so I decided to invest my time and my money, but mainly my time and energy in something that makes me happy. So I just start to make like a funnel. Like if you are an investor, I was trying to look a funnel to invest my time and my energy. So I'm looking for different projects and choosing what can work with different criteria. First, of course, is the project must be great, fun, must be something that will be disruptive. Yeah. And second, of course, there must be a project that has any sense in terms of economics. And so the third, that it's more important, it's in any place that I would be able to add value.
Yeah.
Because if I cannot add value, it's not work, It not works for me. So I know a guy that they are starting a crowd equity platform to invest in biotech startups.
Mhm.
So it looks like very difficult, but it's super easy. It means that if you have a credit card and you go to the platform, it's a website, you can buy shares of a little companies, as same that you are buying Apples or Google, no? And it works quite well. It was very strange 10 years ago and not regulated. People didn't understand exactly what they are doing. But yeah, at the end, the market was maturing, the laws were coming, and at the end, we create a nice platform. But right now, is the biggest investor non-institutional biggest investor in biotechnology in Europe. So the name is Capital Cell. So and this was my first step, no?
Yeah.
So, and this was for 4 years. Once the company was running, and my value and maybe, of course, I took a year with the family in Asia, thinking about what I want to do, and I discovered crypto. So I discovered crypto because I was in Bali. That it's a huge community of experts.
Yeah,
a lot of them very, very smart and very techy. And I discovered with them the world of crypto. And 4 years ago, DeFi was just didn't exist. But they start with some projects and we meet with a guy that it's an EthicHub founder, that they had a crazy idea that is just to lend money to a little farmers in the other point of the world, that they are unbanked, and they want to use crypto to do this, no? Amazing. So you can imagine, no, like investor, like a person that was working with crowd investing for years.
Yeah.
Like a person we took the pill of the crypto, and I saw this project and say, okay, I'm going. Yeah. So I just put a bit of money in the loans. Yeah. And I received the return, so I was surprised, no? Yeah. And I took a flight and I go to Mexico. Yeah. I go to Mexico. I was visiting the farmers. I was visiting the guy, and I was absolutely in love in the project. So I'm spending my last 2-3 years, 2 years, let's say, helping the project and putting energy and ideas in EthicHub.
Awesome. So I think that's a good spot for us to just jump into EthicHub. So you and I, we met at Barcelona's D4A conference in November 2021, right? And why I went there and why Martin and I thought it was a cool conference is that in the very prospectus of the conference, it says, we're using blockchains to improve social, corporate, and individual governance, ideally making them more democratic. And so it's very concordant with us in this podcast, right? We're really into this idea of the ownership economy, which, like at a high level, just means creating a new economy under a more cooperative model that aligns all the market participants in a way where we can build new incentive structures and basically get us to better outcomes, right? More broadly distributed wealth, cross-border, all that kind of stuff. So I see EthicHub as a very direct expression of this movement. So maybe this is a good spot for you to really dive in and tell us, like, what are all the various pieces of EthicHub and really what's going on there, right? Because you can give it the short description of DeFi lending social impact platform, or, what we'd really like to hear is, what are the various sides of it, and kind of just walk us through
it. Let's say that EthicHub at the end is a community. It's a community that it's based more or less into roles of users or into roles of members. The idea is that we connect, or EthicHub connect, investors, people who have wealth, not necessarily you can invest $20, so not necessarily rich guys, and they want to invest this money, lending this money or these people to little farmers in another point of the world. So farmers are part of community as well. So not only investors, not only crypto users, farmers are our community as well, and cooperative are our community. So the platform mainly connect these two needs, because investors mainly they are looking for they are looking any protocol or any space where they can put their safes, and farmers are looking liquidity because it's so hard if you need to work all the year, so you have only one payment per year. So you need, I think most of us, we are not able to save all the money of all the year with one payment and manage our economy. And if you don't have any capacity to finance this period, it's so hard. So the farmers, they have these needs. And 80% of the farmers in the world, they are little farmers, and most of them are unbanked. They don't have bank accounts, so they don't have any capital access, and they only use cash. And if they ask for a loan, they pay something that went between 100 and 200% of interest.
Oh man, that's brutal. Wow.
So EthicHub is here just to try to solve or to break this circle. And the new issue or the interesting thing is that it's done by blockchain. So it's like, for me, it's the demonstration of how the technology can be used to do some things. No, in this case, we create the smart contracts. So you can invest in these smart contracts, and the smart contracts manage the rules of the lending and the borrowing the money. So at the end, in short, you can go with your stablecoin, or you can go with your credit card that we convert to a stablecoin, and you can invest in the loans at fixed rate that right now is 8% in US dollar. Of course, we don't use US dollar. We use XDAI. That it's a DAI in the XDAI network, and you receive your return once the loan is returned. And we started with an MPV with 500 farmers and 1,000 investors and $1 million. And it works very, very good. So we were very excited. And so we decided to launch the second phase. The second phase is...
Before you get into the second phase, I want to make sure that listeners and all of us are kind of oriented around the marketplace and its actors. So just to repeat, right? You have your investors, who are investing XDAI or DAI on the XDAI protocol, and then you have the other side of your farmers, right? Who are then receiving these loans based on a smart contract on the Ethix platform. And then is there also a Ethix DAO or an Ethix, like, is there another sort of, third sort of governing layer for that, or is that kind of in process still?
We start just using blockchain with any other tool. No, the second phase was which is the problem? We have two problems that we want to solve. One is you can use a stable coin, but you cannot. We don't have any governance token. So we create the Ethix, that is the governance token of the platform. Because we create the project, we create the company, but the aim and the focus and the objective is to deliver all the protocol and all the software to the community, to this DAO. No? So we create this Ethix. And how we manage, which is the functionality of the value of this Ethix. Of course, the first is it's a tool of governance of the platform, but we go further. No, we decided that this Ethix we create a tokenomics, and we decided that 4% of all loans will be used to buy Ethix in the market. So to create value and to create a buying pressure in the market, because of course Ethix are in decentralized markets, in Balancer, Uniswap, etc. So once the Ethix is a governance token, and once the Ethix has value market, we use it to collateralize the loans of the farmers. So when you are investing in your stable coin at 8% to the farmers, you have a risk of default. And the first investors, they took the risk. But when we put the Ethix in the smart contract, in the equation, we use it to cover the risk of the loan. So if one loan is not returned at properly time, we use these ethics that are collateralizing the loan and we sell it to the market. So we are creating a pressure in the price of the ethics. So the market has two forces that are fighting. One is the force of the farmers are returning properly the loans. So the price of the ethics is increasing, or farmers, they are not returning the loans. So the price of the ethics is going down. So if you are buying ethics, you are buying the trust and you are giving trust to the farmers.
So I take USD or euro, right? I convert it to a stable coin via centralized or decentralized exchange. I then buy Ethix which is Ethix is it a ERC20 token, or what sort of token is it?
It's an ERC20 token. It's an Ethereum, and we have a synthetic in XDAI, Ethix.
Okay, so I convert my fiat to my stable coin. I essentially convert my stable coin to Ethix. I'm investing in Ethix. Ethix is tied to the underlying equity in EthicHub and effectively is utilized to collateralize the loan that is being made out to the farmer. Do I understand that correctly, or am I missing a beat here?
No, I'm sorry, Martin. Maybe I'm not being able to explain it. Just to invest in the loans, you just register in EthicHub and you can use your credit card. Okay. And just with this, we convert your investment in dollars or in euros or in anything in a stable coin, and we put it in the smart contract with a web wallet. Okay. So you can invest like in your fiat or in your stable with no very, very straight ahead, very directly, most of 80% of our investors are not crypto users. They just register in the platform, they put their fiat, and they invest in the loans. They know that we use crypto like a tool, and they know that we convert, that they don't care. They just put the money and they receive the return. In the other side, we have crypto investors, guys that want to buy our token. With this token, you are not investing in the loans because the loans must be always in a stable coin, because we don't want to give to the farmers the risk of the volatility of an asset. No, we started in the beginning with Ethereum and it was a mess.
Oh yeah, imagine.
With loans. So if you have, like a crypto investor, you have the opportunity to buy Ethix. Why you are buying Ethix? Mostly because you think that the Ethix will in the future will have more value, or because you want to be an active member of the community. How we design the tokenomics to give value to the Ethix, just using part of the loans to create this structural and organic buying in pressure. But of course, the design, it works in the other side, no? If the loans are not properly returned, we need to sell the Ethix to give to the investors that they are investing in a stable coin and they are covered and collateralized by the Ethix. So at the end, the Ethix, when you are buying Ethix, you are collateralizing the loans of the farmers. So you are giving a guarantee or a collateralizing to a people that are not able to put it. So because why in DeFi, it's very easy, no? You have assets, you collateralize your assets, and you have a loan. But what happens if you are not able to have assets and you are not able to give a collateral? You are fucked. You cannot ask for a loan.
Yeah.
Okay.
So
just so I get to I want to make sure I'm clear in my mind, right? And I've read the presentation, and so I should really understand this, but I'm still. So effectively, the kind of macro risk here, like how much variance is there with the overall crypto space in terms of like what's the covariance between or the correlation between your ERC20 token and in the macro environment, and how much that the crypto investors that are going into that to collateralize the loans that are coming from stablecoin, if there's a massive crash in the market, does that have any effect on your business model? Or are is the risk pretty neutral in the way that you've structured this?
Of course, nothing is neutral. But the first point is that even the collateralization goes to a very low level. if the farmers are returning the loans, like investor, you are very good covered. Right now, we have only 1% of on payments.
Okay.
So the second is that right now we have 50 million of Ethix collateralizing the loans. Right now, the Ethix, it's around 0.5, 0.6 US dollar per Ethix. So right now we have theoretically 25 million of value in collateralization. And right now, our live loans are around between 1 to 2 million. So right now, the ratio between the open loans or the live loans from the collateralization is quite good. Which is the idea? The idea is that if the project is doing well and the adoption is growing, the price of the Ethix will grow. So as the price of the Ethix are growing, the value of the collateralization grows.
Okay, so, and one last question here before Jahed, sorry, I'll let you jump back in. But versus say a bank, right, which would have tier 1 or tier 2 kind of capital ratios at like 10%. Theoretically, if you've got a 1% loan default rate and you've got 25 million in Ethix, theoretically you could be lending out 250 million. That's what I'm understanding. Like if this was a traditional bank that was making loans, right, and you effectively had this default rate and you had kind of developed a risk parity model to have a 1% default rate and you had 25 million in liquid cash, my understanding is that you could essentially go out, you wouldn't, but you would, if you were a regular bank, you could lend out kind of 9x leverage on that, right? Or in your case, you might feel comfortable lending out 99x leverage if you weren't looking at the macro environment. Am I understanding that right?
Yeah, in the traditional bank is right. It's like this. In DeFi, let's say that you feel comfortable with 300% of collateralization. So our idea is that we want to move between 300 to 500% of collateralization. So right now we can feel comfortable if the Ethix is at 0.5 with 5-6 million of lending. But the idea is that when you are operating, let's say $10 million, you took $400,000 to buy Ethix. So you push up the Ethix. So when you push up the Ethix, your collateral is not 25 million, maybe it's 50 million. So you can go to so you are creating a virtual loop. So as much loans you are generating, as much value you are giving to the collateral. So as much value you have in the collateral, more safe is to go into the system and give and lend to the farmers. So we are trying to create this virtual loop where you can go to thousands of millions of loans. Theoretically, you don't have limit.
Okay. So what I hear from you, and just to dig into the macro here, is essentially in the DeFi space, you want to be 3 to 5x your collateral, right? Which would essentially equate to a 20 to 33% tier 2 capital ratio, where effectively I can lend out against my equity 3 to 5x. And so the argument that EthicHub is making here is that right now it's so hard to essentially get financial products to smooth out credit for farmers that even though banks can lend more money, because effectively in the traditional banking space, like a bank could lend to farmers at 9x leverage under Basel III requirements, right? And you're saying we're only lending at 3 to 5x our liquidity, but there's so much inefficiency, or 3 to 5x our theoretical underlying value of the Ethix token. There's so much inefficiency in getting money to these farmers that's still far more efficient than a traditional bank actually lending here.
Yeah, but let's say that the traditional bank doesn't exist for our farmers. So this is very important. We are focused to support farmers that they are families that they have from 1 to 5 hectares. So a quarter of population in the world, they don't have any bank service. They don't have any bank access. And this quarter of population, that it's thousands of millions of persons, 80% of them, are little farmers. So they are absolutely out of the present financial system. So one of the promises of blockchain is this financial inclusion. So we are part of this financial inclusion. And of course, we are focused in people, in farmers. This is why we are not lending, let's say, a nice lady in Vietnam that they are running up a business, or we are not lending money to medium farmers, or not. Mm-hmm. We are really, really focused in this problem that for some people can be a little, but we are talking about thousands of millions of persons. No? And I think they are the part of the solution of our planet in terms of economically and socially and medioambientally. So, this is, you always say that we try to create this triple impact that it's economical, social, and ecological. No?
Yeah, I think that part is super cool because I'll tell you, I was hanging out with some of the Regen Network folks recently, and like one of our big things that everyone talks about in the Cosmos Regen space is that this whole discussion around banking the unbanked, we're in like year 7 or 8 of it in the crypto space, right? Like people have been talking about this for a long time. They've been using it in their decks, but where are we with that, right? We're not really anywhere with it. But now talking with you, right, this is super cool that actually we're getting somewhere with that, right? You have set up a framework where very specifically you're saying smallholder farms are the ones that we're looking at, the ones who are truly unbanked, and we're bringing some of them into a new financial system. So I would even say that you're not necessarily banking the unbanked, you're building an entirely new financial system in some ways to include them in this. And maybe they're intersecting with banking infrastructure traditionally, but on the way there, but it's not necessarily banking the unbanked because you're not extending traditional banking services to the unbanked. You're just saying, you know what, we're going to do this however we can. So that's pretty cool. And then coming back around to just digging into the tech infrastructure, right? For folks who are listening in, some of you may or may not know this, right? But the XDAI chain has merged with Gnosis. So it's Gnosis chain now. And, when you stay on top of, there's so much movement in this space. If I look at this from the perspective of a farmer, right? And you're talking about getting money into their hands and you do it through XDAI, what's the farmer user experience like, right? Like, do they have a wallet? Do they receive DAI? Do they have to go to a centralized exchange and change that to dollars? How does it work?
It works crazy. Yeah. So no, the first point is that we are an agnostic protocol. So we are running right now in Gnosis, but we are creating a pilot in RSKey, and maybe pretty sure in the future we are moving to Celo as well. Fellow. So the idea is that you can use our protocol in any chain that you feel comfortable. We need to do 2 things. No, one is this chain need to have a stable coin, a reference stable coin, mainly in US dollar. And the second is that we need to create a synthetic of our token in this network in order to collateralize the loans. No? Mm-hmm. And let's say that we start in the past working directly ourselves, going to Chiapas, to Mexico, and talking with farmers. No? And we create the groups and we explain that we are giving them some loans from people that are good guys in Europe or in US, that they have a little savings and they want to share it with them. It was our history there, no? Yeah. And of course, they are not managing crypto wallets right now.
Okay.
So how we solve this problem right now? Right now, we decided that we are not able to work with each farmer. And at the same time, if we want to scale for thousands or hundreds of thousands of farmers. Yeah. So we decided to take one step back and to work with cooperative. So we create our first cooperative in Chiapas. So in terms of practically, who is asking for money is not directly the farmer, is the cooperative. And the cooperative is changing this loan by impact. Let's say that we are looking, and these actors from the community, we say originate your loans or local notes. No? So right now we are working with this model. We have one in Mexico, one in Honduras, one in Brazil, And the plan this year is to have between 10 and 20 more. So we will have little communities and, let's say, local partners that they feel comfortable using the crypto. They feel comfortable receiving the XDAIs and going to exchange and changing by fiat or anything that of course, they discover that it's more cool to have the funds in XDAI than in Mexican pesos. So they only change the money that they need. And right now the idea is scale up, looking for existing cooperative that they are doing a super great job in the field, but they need to be financed as well. So the idea is to join efforts, to join the value. So we ask ourselves how we can add value to guys that they already exist, that they already doing a good job, but they don't have, in this case, the finance to do it. No, and of course, we would love in the future that we want to do some pilots in El Salvador, and if the farmer is able to manage directly the wallet, it's much easier, no? Because our original smart contract was thought to go peer-to-peer, no? But honestly, right now, it's if we want to scale and we want to arrive to hundreds and thousands of farmers, we will use this, let's say, partner in the ecosystem that it's a cooperative. The cooperative, they are buying Ethix as well. So they have decision, they have power, and they become part of the community as well. So this is the last step that closes the circle. No?
Very cool. So yeah, that's really what we're talking about when you talk about ownership economy, right? So like there's a lot of things happening here where you're actually you're starting on the financial side, but eventually, there's a participation in terms of governance as well on the table for these folks, because they can then accrue ethic, buy ethics, and then vote on proposals, vote on how this thing is actually going to go, right? That's the future, right? You don't necessarily have those proposals going today, do you? Like if you think of a DAO, right?
We're trying to do as much as possible the steps to go forward. For example, last year, we were very proud because, we are saving the world because we are giving these guys super good loans and they will be very happy. But it was not true. I go to Mexico, I go to Chiapas, I go to the mountains, and these guys to return because they have a very high sense of honor. So they return the loans, but to return the loans, they need to sell the coffee. And the problem was that they sell the coffee at very low price. So at the end, they have some cash to survive, but they don't break the circle of poverty. So we were very shocked, no? Because in one point, we feel that the project don't have any sense. Why do you want to give money to people if with this money they don't have any profit or improve the conditions of their life, no? So we decided to open our minds and to look for partners and to buy ourselves the coffee and to export to US and to Europe and pay them a fair price, no? And so we open another, let's say, in Spanish we say a melon, no? Another history. And in one point, we became partners of the farmers in terms of giving them export channels of the products. The good thing is that in Europe, they pay 3, 4, 5 times more than in local for the same product because they have a huge quality coffee. And as we present with farmers like a partners, we say, okay, guys, when we have a loan, so we have time to sell it, the coffee. It's not necessary to sell it immediately. You have a harvest. And second, with the benefit, half of the benefit that we did by selling the coffee, we will give you back in Ethix. So this is the way that the farmers took Ethix, and of course they can exchange the ethics for local money, or they can use the ethics to have more collateral for ask for more loans, or they can use the ethics to participate in the community. So this is the way how we transfer part of the community to the originators and to the farmers, because for they it's too hard to understand that they need to buy tokens to participate to a government of something that they really don't understand perfectly.
Wow.
So I just want to be, so like the payoff here is you're essentially paying them with what is effectively a call option, or you're essentially giving them kind of this token that may accrue in value as a percentage of kind of the transaction and a percentage of the spread when you're actually making the payments to the farmers. And so they're getting the token. Theoretically, you start doing more underwriting, you expand to more countries, the value of that equity goes up, and they don't have to actually understand what that equity is, that they are essentially just getting an allocation implicit in the model, as opposed to, say, fair trade. Under a fair trade model, they're giving them a price premium, right, of a few cents per pound or whatever, per kilo. And the philosophy of the traditional fair trade model was that premium could go to livelihood expenditures on the ground. It could go to education. It could go to healthcare. It could go to schools, right? Effectively, what you're saying is we're giving these farmers a percentage of the upside instead of that price premium.
Yeah, that's it. We are not. I always say the same when I'm in Chiapas in the field. I say, guys, I'm not buying your coffee. I'm your partner. I'm helping you to sell it. And of course, I need to take part of the profit of this business, and it's part of the business model of the company. Just took part of the benefit of these sales. Mm-hmm. But the idea is that we are partners. We took a loan, so we took the capital, and we use the capital to create more value for your crops. No? This is the idea. Of course, it's difficult to explain, but at the end, you are paying a fair price, so they are happy because usually they took a good price. But the first year when we return with this, they say like a premium, this premium or this extra, they understand for the second year. So they say, okay, right now I understand that I receive a fair price after I receive an extra. No, so yeah. And this is the idea that, for example, I can give you an example. Right now, the price of coffee is so high. So a lot of people that is working in this market is a little bit upset. And I always say, I'm super happy that the coffee, because I'm not buying coffee. I'm just helping farmers to sell their coffee. So I'm super happy if the coffee is super high and the consumers need to pay more for this coffee, no? And or the chain need to absorb part of the benefit, no? So because we are not in the part that we are buying and selling, even though you are buying in a fair price, it's difficult to say which is the fair. And the idea is, let's disintermediate. Let's put out parts of the chain and let's connect directly, in this case, consumers of coffee from producers. And this was our last mortal loop, no? That we decided, okay, we have the farmers, we have the coffee, let's roast it and sell it. So we create let's say that it's more merchandising than really a business line. But the idea is that from our website, you can buy directly a roast coffee from the farmer that you are contribute to land. And in this case, literally, the coffee is coming from farmer to the final consumer without any intermediate agent.
Yeah, that's really cool. And theoretically, if Ethix accrues in value over time, you could actually get other lenders involved, right? Because to the extent that Ethix becomes stable and there's the ability to backtrace it in a few years and correlate it with other assets, theoretically, the farmers themselves could actually then take out lending against Ethix, right? Because they've got this small token that is now this financial asset, probably one of their first financial assets, unless they've got kind of capital assets and machinery. And so there's all sorts of derivative plays here over time as well as you guys become more successful, I would imagine, because it's acting almost like a savings account in addition to it's acting as both a savings account and an equity that could be collateralized over time.
Yeah, at the end, they are they are partners of the project. They are the most important partners of the project. And so it's fair that we share part of the project with farmers as well.
Yeah, and I think that's key, right? Because otherwise, like you said, you already noticed, this would not be worth it if you're just rebuilding the same structures that cause structural poverty for these folks already, right? So I think that's a really keen insight, that you then looked at that and said, you're not building a charity, you're not building a philanthropy. You really thought deeply about, how do we make a market around this and facilitate a new way to put, throughput flows into the system, right? And that's super cool. And as I said, I don't know if you were recording at the time, but I just bought some right before we jumped on. I didn't buy Ethix, I bought coffee, right? I went on the site and I was like, well, let me just see how easy this is, right? As easy as any other e-commerce Shopify powered experience, right? It's brilliant. And so, and just for listeners, right? I don't know about US, I'm in the EU, right? But here it's perfectly competitive with any other coffee from a high-end roaster that you would get, right? Like, it's the same price. There's no change. There's no difference at all. If I walk out of the street here in Barcelona and I go to Syra Coffee Roasters, or I go to one of the other local coffee roasters, it's got excellent coffee, I'm paying $12.99 for 250 grams or whatever. It's same price. Like, no difference. So that's cool. And honestly, in some cases, it's probably more. It's like 14, 15 euro outside here on the street in Barcelona. So perfectly competitive price you guys have been able to deliver as well. And just so, to get us, oriented in the right frame, this to me, not the right frame for you guys, just for myself, is that this is now, like you said, we're building a circular economy here around this, right? There's an economy there's a part of it that makes loans so that people can produce. There's another part of it where those folks are funding the loans, the investors, and then you're closing the loop between them, because some investors might also be consumers. And then you're also going to pull in other folks who just want to be consumers. And you've now created a nice little loop, a virtuous loop in this economy. That's awesome.
And I always explain the same, no? If you are able to pay properly the farmer, you are being sure that your loan will be returned properly. So at the end, a good price for coffee is good for the loans. And if it's good for the loans, it's good for a quality of the coffee. So it's increasing. The farmers with the money, they are increasing the quality, and they are increasing the productivity, because they are able to buy organic fertilizers or to take properly works of the fields. So all our coffees are tasted by experts every year, and we saw that they are increasing. In a specialty coffee, we say SCA points. So they are increasing almost 2 points every year. So from the standard, in a specialty coffee, you start in 82, 84. Yeah. And some of them are increasing to 84, 86, 88. So you can see how, with properly tools, if you want to work properly, you can create more value, not just in terms of finance, in terms of proud, because they feel more proud about the work and about their product. Yeah. And in terms of experience and final product. In this case, it's a coffee that it's more organic and give you, let's say, a better experience, sensorial experience. No?
Yeah, that's awesome. Well, then also, like, getting back, Martin mentioned this a little bit around fair trade. I'm also curious on this side. Right, this is me speaking personally, but one of the reasons why I'm involved in this space and why I'm excited about it is that when you look at certain things around multi-stakeholder initiatives like fair trade and other things like that have come out, where people are trying to get to better human rights outcomes, they're trying to reduce poverty, they're trying to do this with certifications of various kinds. They're, Martin's expert on this too. There's hundreds of these, right? But one of the things that's interesting on your site is that you have this thing where you're addressing 9 SDGs, right? Sustainable Development Goals from the UN that are part of your project. And so I think that's pretty cool. And then at the same time, I think, why I'm in the crypto space, and not necessarily even crypto, but just governance, right? Looking at the governance tooling and organizational structures that are here, is that one of the things that I see happening here is experimentation around governance. And that's one of the key missing parts of multi-stakeholder initiatives, right? Is that the governance is really not something that's leaned into. And as an effect, a consequence of that is that people can game these initiatives, right? They can say like, yeah, of course it was fair trade, or I certify that, so-and-so happened. So how do you see the potential of something like what you guys are doing in your targets with SDGs and, crypto and the tools that are coming out to help you actually achieve these outcomes versus the existing, sort of status quo around SDGs?
In like a crypto investors, let's say, or like crypto users, we have a challenge because sometimes we forgot that we create crypto to like a tool, not like an objective. So it's a tool to make decentralized world. It's to make a more freedom. It's to improve So I think that our challenge is how we use this technological and finance capital and how we move this benefit and this, because we are pretty sure that this will be part of the economy of the present and will be a huge part of the economy of the future. No, and the challenge is how we can move this economy to benefit humans and the planet, both of them. And because this is the objective, and the crypto is the tool, not the objective itself. So let's say that we are going in the opposite direction. We are not going to, of course, we will be in the metaverse as well, no? But the idea is be focused to use the technology like a tool to benefit the humans and the planet, no? And I think we are creating super nice concepts like regenerative finance. And I think this is the point, no? How we need to ask to ourselves how we use these tools to create something, not necessarily, let's say, better world, but something that it makes us feel better and can be and at the same time make a wealthy economical situation for all of them, for all of us, no? Because when we are talking about farmers, we are not talking about donations or we are not talking about charity. We are talking, guy, put your USD dollars in a, let's say, reasonable, safe place, and you will receive an 8% yearly in return. And I think we cannot say that it's something like charity, no? Yeah, I think it's a good business for any investor.
Cool. So then, like, if I were to summarize that, really, like, the failure of a lot of these initiatives, has been one of the big failures is governance. And I know that, like, you talked about addressing this over time, right? Because the market you've created, some of those sales will then come back as EthicHub, right, tokens, right? So, like, if you sell your coffee on the EthicHub marketplace, you will get 50%, cash, 50% Ethix, right? If I understood that right. So over time, then the ones who participate the most within the circular economy of EthicHub will also accrue the most rights to direct where the platform goes in the future. Is that correct?
Yeah, this is the idea. The idea is that at the end, who are we to decide who is able to go to the platform and ask for the money? Or who are we to decide that the investor need to be paid at 8% and not at 6 or at 10? Yeah. So this kind of decision is a decision that we don't want to do it by ourselves. We think that we must be decided for the community. Yeah. If the farmers decide that they want to pay less for the loans, it's fine. They are taking a risk that the product is not interesting for investors. Yes. If the investors want to push in the other side, they have a risk that it's too expensive for the farmers. No, so we need to have discussion communities, and we think that with this discussion we will arrive to a balance point. And another thing that for us it's very, very, very important is that let's think. We assume that in a couple of years or 3 years we are managing 100 million of loans, for example. But the problem is that, of course, we will not focus only in coffee. We will be open. We are making pilot with cacao and other markets, no? But in one point, we need to decide who can go and be benefit and be part of the community or not. So right now, this is the first point that we're using in the DAO. So the DAO is deciding right now who is participating like a originator node in the platform or not. So they put the project, they say, okay, guys, I have this community. I want to support this project. They are doing cacao. Cacao and so on and so on. I am in Colombia. And they decided if they accept to the community. If they are accepted to the community, the second point is that these guys need a collateral to ask for the loan. So we are creating, the DAO is launching the second step, that it's a crowd staking, let's say. So people that stake the collateral for these cacao guys. Once we have this local node that is approved by the community in terms of ethics, in terms of project, and once you have the collateral, you have a product, and you can go to the platform and offer to investors at 8% in a stable coin. So we are constructing the DAO from the farmer to the top.
I'm sorry, it's like a mind-blowing moment for me, man, just because I think about how a company like this diversifies. You're essentially deciding how you're going to diversify your product lines. And it's super cool because you can actually turn to the community who has information advantages around this and have them do all of the work, almost all of it, and be like, how can you de-risk this for our platform? How can you make this a more desirable opportunity for the investors already on it? And you can just kind of systematically go through it. And by the time and go to market here could really just be debuting on the protocol, right? On the network. By the time it does that, you've de-risked it so much, like because of this crowd staking and all kinds of other things. This is fascinating, actually. This is very cool. And you've set yourself up from the perspective of, the platform is not called Ethical Coffee or something, it's EthicHub, right? So it's like you have this potential already in people's minds to at least expand to cacao, coffee, maybe plantains, whatever you end up doing next, right? There could be a lot of things like this. So that any commodity, right? That's awesome.
Yeah. Let's say that at least by design, the protocol is thought to be unlimited and to can scale to the infinite. In terms of if some guy wants to ask for a orange project in South Africa, I don't have any idea if it's a good idea or not.
Yes.
So the idea is that we will ask to the community or say, okay, guys, we have one guy that wants to support this community with this business that they want to do this. Do you want to give them some loans? Mm-hmm. Usually, if the community decide to start with a pilot, let's say, okay, let's give a bunch of bucks to these guys, and let's them to start and learn. And if they return properly the loans, and usually they give to the community some feedback. No, okay, guys, you can see right now what we are doing with your money and how we are taking care about oranges and how. So you are creating this trust between community and the local nodes. So in the second round, they can ask for more money. So the community, they stake their ethics for more collateral. So they increase the loans. No? Yeah. And of course, as these guys need to have some of a skin in the game. So to the cooperative, we ask them to take some ethics and put it like a collateral as well.
Yes.
So, of course, they are not over collateral because it not has any sense, but part of the collateral belongs to these local nodes as well.
Very cool. And so then this, just speaking for myself as an investor, this has all of the features of, an ownership economy play that I very much love to see. There's bottom-up governance. There's leveraging community as a network effect, right? Like you have an existing community, the edges of that network can pull in new nodes and expand it by itself. And then at the same time, you are able to broadly distribute wealth as a way of participating in governance. So that's just fantastic. I'm sure there are critiques. I'm sorry, guys. Today, I'm the cheerleader, maybe Martin has some harder questions, but talking with you, I've seen some of the materials as well, but talking with you really brings it to life, right? In terms of what you're actually doing. And so that's really amazing stuff. And Martin, before I kind of turn towards the conclusion, and kind of wrap up, is there anything else you wanted to jump in and ask?
Yeah, no, I'm just trying to think about it from the investment perspective, right? And so like as an investor, like why am I incentivized to kind of go to take my Ethereum, convert it into wrapped Ethereum, swap it on Uniswap for Ethix? I mean, that would be the way that I get into this, right? I take $10,000. I essentially trade my fiat for USDC, trade my fiat for ETH, traded my ETH for wrapped ETH, go to Uniswap, trade it for Ethix, right? That's how I essentially bet on the future of Ethix. Is that right, Jordi? Am I right there?
Yeah, I can say, Martin, the same thing that I said to my father. Take 100 of your save and take a part, and let's say 90% of your save can be in a stable coin. So you can put it in loans and you will receive 8%. And take the other 10% and buy Ethix. So buying Ethix, you are contributing to the project and you are giving value, the collateral that is protecting your first part.
I like it. And I just want to understand like the underlying, like is Ethix tied to how does the tokenomics work? Is it tied to the underlying equity of the company at all and the underlying platform, or is it completely separate?
It's a completely separate token with the equity.
Okay.
The Ethix it's a utility token.
Okay.
So it's but of course the design of the Ethix is to capture the value of the business of the protocol.
Right.
Because at the end we choose 4% of the loans to buy Ethix because it's more or less the estimated benefit that the benefit that we estimate about when you manage the loan. No, so we take this benefit and put it in an operation of buying Ethix. So at the end, we are transferring the value of the business to the token.
Okay. So unlike a bank, I'm just trying to think about this from the perspective of an investor, right? Unlike a bank, which is lending against its assets on its balance sheet, right? Here, you're not actually like the appropriate way of valuing EthicHub as a company is actually not very much tied to Ethix. It'd be hard to value it that way, right? Because effectively the underlying, the assets on the balance sheet are not actually owned by they're not actually owned by the shareholders. They're owned by the shareholders of the company, but the shareholders of the company are the team, right? Is that what I'm trying to go through in my head is how do I value Ethix as a token, right? Ethix is trading at about a $50 million market cap right now. And if I was thinking about this as a bank and I wanted to buy into a bank stock and I looked at comps, right? And I looked at JP Morgan, I said, what are the risk-weighted assets of JP Morgan versus the market cap? And I don't know if that's the right way to think about this, but I'm just trying to better understand from the perspective of if I want to make a bet on Ethix, how do I value that? Do I value it as a multiple of the underlying money that's been collateralized, or how should I think about it? How do you think about it?
Let's say that I think we need to, myself, like old school investor, we need to think in another. I think we need to think in when you buy a token. In my case, you need to think if this token will have more or less value in the future. This is the idea. And sometimes this value is organic and sometimes it's not organic. So some tokens has more value in the future just because people want to buy it because they are more used for any reason. No, how we create the token is okay. Let's put in the equation something that gives value, even though just is proportional as the volume that the platform is moving. No, so one question, it's very easy. No, if in 2 years we are managing in the platform 100 million. So we use 4 million to buy Ethix in the market. You can assume that the price of the Ethix will be lower or upper than right now.
So that makes sense to me. I think I would love to have you come back in, maybe in 3 months or so and do an entire show on the tokenomics and thinking about this from the perspective of DeFi versus traditional finance and the way that we would value a traditional lender versus the way we value you, because I think that would be very informative. We don't have time now. We're already at 75 minutes, so we've got to run. But I think that would be a great next episode to have you. Because again, like Jahed, I'm a cheerleader here. I think everything you're doing is amazing. But at the same time, I really want to get into how do you think about this from the investment angle as well, if you want to essentially be buying into the network as a whole. Jahed, I'll hand things back over to you.
Cool.
And of course, this is a community, this is a protocol. So I explaining the rules that we are thinking that it works for the project, but nothing is written by stone. So if Martin is starting the project and you are suggesting that something can be done better, of course, the community is open to listen to you and to implement it.
Yeah.
I got to study more before I suggest something, but yeah, I'm mostly interested in just better understanding.
Yeah.
I think it's very important for that. This is not like a project that I want to sell you. This is a project that we can share and we can construct together. And of course, we don't have all the truth because all the project that we can present right now, it's a mix of intuitions and a decisions that we are doing in the last 3 years.
Yeah.
So I'm pretty sure that in next 2 years, we will have more intuitions and we will have more ideas that can be put it in the project. So it's not a thing that it's closed. This is a DAO, and the DAO can decide how they manage these tokens and how they give value to these tokens. No, I think this is very important for the crypto scenario. No, that nothing is an idea of an entrepreneurship that say, guys, my company, this is the value because this is the business, and I will do this. No, guys, this is the token, this is the project, this is the proposal, and it's open to any idea. And if you decided that we can create another dynamics that it's better, and it's approved for the majority of the community, let's do it.
Awesome. So I think we can, it's funny that you said you don't want to shill. I give everyone one last opportunity to shill your project. So tell us all, where can we find you online? How do we learn more about what Jordi and EthicHub are working on? Shill your project. Last chance.
I suggest to everybody just to become to the community. So let's go to www.ethichub.com. Just please register and try put $20 and be part of the community. And I think it will give you more experience and knowledge, and it will be maybe the most value investment that you can do in your life. This $20. Yeah.
Awesome. And thanks, Jordi. And then on my side too, just to recap, you never know who's listening, but nothing we have said here is financial advice. So, do your own research. And parting thoughts on this too is that, you mentioned before, let's move capital, into this crypto space for the benefit of humans and the planet. And one of the memes that's emerging here is regenerative finance, right? That is really the point of crypto, is going from this degenerative, extractive point of view to regenerative finance while also making money for everyone who's participating in it. So I think, from my perspective, this is a canonical representation of all of those aims that you guys have put together in EthicHub. So thanks a lot for joining us today. Thanks a lot for your time. And like Martin said, we'd love to have you on in a few months again, where we maybe just dive into the tokenomics alone, because it's fascinating stuff, man.
Thanks to you guys. It's always a pleasure to discuss with. And this is the funny part, the fun of this kind of projects, no? That we can share, we can discuss, we can invent. Nothing is written, nothing is done before. So it's always at the end, EthicHub protocol, we didn't invent anything. We copy a lot. We copy from a lot of projects and we mixed it and we create our own model, just taking some parts of one project and some parts of the other.
Super cool, Jordi. Thanks for being on today. And we'll be in touch, man.
Thanks, Jordi.
Okay.
That was awesome.